Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The minutes of the RBA's latest monetary policy meeting were released yesterday, and in the minutes policymakers debated over the recent interest rate cuts, citing that it could raise house prices. Along with that, may fail to deliver a boost to the economy. The RBA did acknowledge that its June and July rate cuts didn't achieve much at all in its latest October meeting minutes. From a technical point, though, you can see the market has backed away and for the last two consecutive days holds to a bearish case. We have taken out the support seen at 67.50. This was a trigger level that called now for 66, 70, 80 for a target. From a technical point, we are breaking down. But it all depends, I suppose, on tomorrow's official Australian employment numbers, which are expected to show gross employment, both full and part-time, and with the forecast of 15,300 in September, with the previous stronger number of 34,700 in August. However, August showed the fact that it was all part-time hiring, which is not viewed as a positive as full-time. The unemployment rate currently holds at 5.3%. Now, as I mentioned, the technicals are breaking down. Any advances should find resistance still close to around 67.80 to 68 cents. The euro hasn't really changed over the last 24 hours and still maintains within a tight parameters of 109.75 to 110.65. From a technical point, we've got a long-legged doji. This gives us some uncertainty in direction. At present, though, we should still cast our view towards the top side in case we get a challenge to the upside, but given this opportunity, as long as we remain capped at 111 figure 15, I feel the market will look towards the downside, and a break of 109.75 gives us the trigger back towards 108.65. Dollar yen has broken the level of 108.60, but no follow on as we see it trading at 108.80. Looking at the downside, we do need to see break of 108.40 to give us the next move as a trigger to the bearish bias, and therefore reopen the way to 107.85 to 107.15.35. Now, although I am short at these levels, I have a stop above 109.05 as I feel the market could progress further to 109.70 from that break. So do keep that in mind. The sterling rallied even harder overnight after talks of the fact that we could see a deal very, very soon to the Brexit, to a positive one. So the market did rally very, very firmly to a high of 127.99 before slipping into a consolidation pattern. With the Brexit news hitting overnight, reports suggested that the UK and the European negotiators in Brussels are closing in on a draft Brexit deal with optimism there will be breakthrough soon. So let's see how that all plays out. One thing to note, there is a little bit of divergence, but need confirmation. If we get a break of 127 the figure, we'll support this back towards 124.30. Other than that, I'll remain neutral at these levels. Gold, still holding to a neutral view, is a little bit weaker, and we can still see a fall towards 76 to 69 to 60. I don't have a strong view here, but I am seeing technical implications coming through to the bearish case. I would rather sit out at the moment and wait until I see better opportunity to step in and buy gold. Wrapping up with the oil outlook, well, the market took the challenge back to 52.65 and now holds by a thread. If we see a close under there, would give further scope back towards the lows of $50. So reassess from there. But we haven't completely broken this level of 52.65, so let's see how it plays out. In view of remaining intact, though, I do expect to see further rises back up to the target of 56, but this level is the key to the next move. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoyed the great start to this new day.